Welcome, everyone, to another episode of the YouTube show and podcast, None of Our Businesses, where we have many accountants with us. I'm not even going to introduce them this time. You know who we are. We've got many accountants with us to talk about various things in the news, tax, accounting, and so on. What's on deck today? Well, we're going to be talking about 3D printed house, Disney accountants behaving badly. Retail sales grew over 5% in the month of January. Is that the stimulus? Another fat-fingering accounting tale of woe. Citibank accidentally wires $500 million. $36 billion has disappeared from the federal unemployment coffers due to fraud, and the tip came from a California rapper laying it down in their bars. From Accounting Today, tax changes brewing for online alcohol marketplaces. And unless you're living under a rock, Texas got hit hard by winter storms, knocking power offline and bringing communities into disaster. Aren't we more advanced than this? Finally, we're going to finish up with some lighthearted accounting fun. All right, guys, let's do this. How about we get started with Charlie?
All right, so I've got an article we can talk about today from the Daily Mail called America's First 3D Printed House Goes on Sale in Long Island. And so the article is taking a look at a new process that's in place where they are actually taking 3D printers and computerized processes and a team of 3 workers to build a house in 2 days for under $300,000 in Long Island, where houses are historically a lot more expensive than that. And so the people who are making this product are, of course, saying that it's going to be this big change that's going to revolutionize the housing market and that everybody's going to be doing it. And basically the way it works is 2 employees kind of keep their eye on it, and it prints out all the different parts, and then it lays concrete and then in layers to essentially build up the walls. And so I kind of wanted to talk to you guys about it a little bit and see, I know that we have some people on the call with some real estate experience. And so I wanted to see if you guys feel like this is going to be kind of the great equalizer in the housing market and is going to be the way that people do things from, going forward. What do you guys think?
I'm just trying to imagine, how big is this 3D printer?
Big, very big. It didn't give exact measurements, but it did mention that it was a very large machine and that it took a full site and that the 2 people are basically there to guard it because most of the time it's just printing slowly.
So that's interesting, because I assumed from the title that they'd be like printing the components and then putting the components together, but it's like they're literally building the house within the printing facility.
It melts down solid materials on site and prints them there. And then there are parts that are 3D printed that are like for the roof, it uses a different style. But yeah, there are some actual, like a mini foundry, I guess, going on site.
So I wonder why this is cheaper. Is it because of the less labor? I mean, you'd think the materials are at least as expensive.
Yeah, I think less labor. And I also think, I guess, just being able to work with raw materials and having less people involved makes the supply chain have less players in it. And so, and that's kind of why when I was looking at the article, I was thinking about, is this going to be what brings a lot of third world countries? I know it's hard to get a 3D printer going in a third world country, but I'm just thinking that this might make housing, more universally available.
Yeah, one of the other things that the article mentioned is that it took 48 hours to print the entire concrete structure for the house. Now that's significantly faster than doing something with lumber. Personally, I have a 3D printer, and that damn thing clogs up at every given opportunity. So I could just imagine the nightmare of trying to print an entire house made out of concrete, because after a time, I'm trying to print something that's like 2 inches in diameter, and I can't even get the damn thing to work.
I guess I'm a little more pessimistic on this whole thing. I've seen like Lego houses, where they had giant Lego kind of blocks that they were making houses with that were insulated. And there's really like a story an industry that's really close to this that tried to bring down the cost of homes. And it's the manufactured home, where it was, an assembly line where, essentially you had, it's just like making any other widgets, but you're making walls, roof, and half a house, and then you truck it on site and slap it together on a concrete slab and hook it up to, plumbing and electric. But I think what it will do is I think it'll make, like what Charlie's talking about, in those areas that are probably off the beaten path, you can drag this machine in and have essentially print a house in a remote area. I think it's interesting, and I think time will tell, but I'm wondering if it's too large of a barrier for most, general contractors or house builders to kind of take that leap to buy that kind of machinery, and what the lifespan is on that thing, and how much it costs to actually operate the machinery itself that does the printing.
I know just last week I saw my first, I guess, 3D printer product, and it was, of all things, if you're a Lost in Space fan, a Jupiter 2. And I thought that thing was kind of cool. I guess I'm more easily amused, but I mean, if you think about it, I mean, they're already using 3D printers to recreate human organs. And that came out years ago. I don't know to what extent they've done with that, but if they can do that, to me, building a house would be child's play.
Yeah, it'll be interesting to kind of keep an eye on it as it evolves. All right, AJ, do you have another article we can talk about?
Yeah, actually, mine comes our way of the Walt Disney Company, and they've been accused of accountants behaving badly, I guess. So a former Disney accountant is now suing the Walt Disney Company in federal court. Backstory on this is she was, I guess, a senior financial analyst at Disney. And essentially what was happening was she brought to light that some of the charges and revenue items were being double charged essentially in the accounting system. And the workaround that like her higher ups found was just to charge more discounts. So this revenue is essentially being double booked, then caught by auditors and having to be adjusted at the end here. And she's feeling retaliation for it. So I thought it was an interesting story from the fact, I think, in the past, like if you think about like a financial crisis or something, like when they talk about a bank being too big to fail, I think, what I kind of got from the article, and maybe you guys can chime in if I'm wrong here, or if I'm just taking this off in the left field, was kind of an accounting department that was too big to change. You have somebody at kind of, I don't want to say bottom level, but somebody identifying like a problem with the system. And I think probably everybody, they're a mature business, and these probably points of sales and revenue information coming in was, probably a system that had been around for a while. And instead of fixing it or identifying the problem and moving forward with it, they just found a quick workaround kind of, and that brought the ire of this employee, I think. Then it came back to bite them. But I kind of thought of it from the perspective of somebody at that manager level or whoever she was reporting to, kind of not taking the problem seriously because of the robustness and I guess maturity of their accounting system. But I'd like your guys' take on it. Maybe I'm just reading that wrong.
Yeah, I do think that that's one of those big hurdles to overcome anytime you come into a mature accounting structure where it feels like there's a system in place that works and has been being used. It's difficult to bring up issues because you feel like, how can I challenge something that's been in place for so long? But so many times, like you're finding in that article, things are just not right. And until somebody brings it to the attention of an auditor or, someone stumbles across it, then it just doesn't come up. The other place I see something similar like this happen a lot of times in small businesses is in consignment accounting, where they don't understand it and they don't get it right. So they basically just buff up revenue, and then they know they didn't make all that money. So they'll just be forced to plug it somewhere, and they'll pick either revenue or cost of goods sold. But it just seems like a similar issue with really understanding your revenue structure and, having a system in place that encourages questions, I guess, because if lower people in the accounting chain can't talk to you about issues, then that breeds this, kind of environment.
Yeah, I can't say I know what's going on behind the scenes of the accounting department, but I will disclose that long ago in high school, I was an employee of the Disney company and worked at Disneyland for 2 years. And they took things pretty seriously. They didn't really Mickey Mouse with all the different procedures. So it seems like this is not typical, and maybe it's just somebody disgruntled. I have to say, Disney was probably had the most perks and was one of the best companies I've ever worked for. Present company excluded, of course, but it was just. I have a lot of faith in Disney, and I know there's probably, with a company that big, there's stuff going on behind the scenes, but I tend to give them the benefit of the doubt.
I've seen some interesting things at some sizable companies, and one comes to mind that's a local. I was just actually telling this story a few days ago. That they had gotten to grown to be an $800 million a year company, and basically it was the founders still in, and they had just moved out the founders. Board of directors had enough. It was a publicly held company, and they had somebody from a reputable Big Four who was the CFO, but it was like them and 10 bookkeepers. And some of the things that were going on there would really be head scratchers, but they were just growing in leaps and bounds, and they just were not investing in staff that to keep up with this. And it was just weird to, because they had a Big Four audit firm in there, and they'd ask questions. I'm like, well, I don't know what did your work? What can you reference your work papers? What did it tell you a quarter ago or a year ago? It was like everybody was just kind of knew this has been going on, but nobody really enforced it. Everybody kind of looked the other way. And, it's frustrating if you're somebody at one of those lower levels and you're bringing these things to people's attention and they're not doing anything about it.
So true. The magical kingdom might have a wand in the mix there. But Jack, you got another article for us?
Yes, I do. Interesting. It shouldn't be a surprise, but retail sales grew 5.3% in the month of January. But why did that happen? If you send people stimulus money that they don't need to pay food, rent, and utilities, they spend it on all the toys. And they kind of broke it down in the article, and it was spent on appliances, electronics, furniture, home fixtures, things of that nature. But again, that's as far as economic health goes. I mean, that's a great one-time shot in the arm for those in those industries. But looking at the bigger picture, I'm hearing. I can't wait to get your guys' take on it. We're talking about that we're really primed for a real red hot economy, and certainly those pieces are in place. If we're managed to stumble and fumble along and maintain this level through COVID, once you get that many more people working again and get this economy humming, things could really take off. But like I said, these one-time shot in the arms, I don't see them as growth shoots per se. I think we really need to kind of open things back up and get back to what I would call normal before you can really hang your hat on the economy booming. What do you guys think?
I mean, I think if the stimulus, if these kind of shots in the arm, as you say it, can kind of keep things in place for the economy to reopen, I think that's the big question. Will that actually work? And I think, some of the theory behind that came from watching kind of our European friends and how they handled the last recession, and one of the things that they did with this idea of kind of paying people to kind of stay in place, so to speak, until there were indicators of the rebound, or until there was the possibility of a rebound. And I think that's kind of the theory that we're somewhat operating under here. And I think it's also happening in Western Europe as well, not just here where we're giving these stimulus with the idea that, well, if we can just keep the workforce kind of in place, keep people buying things, then as COVID subsides, as the pandemic subsides, we will be ready to rock. We won't have to rebuild. We won't have to start from ground zero, because otherwise, if we let the brutal realities of the economic condition without stimulus hit people, there'll be a reordering of the economy temporarily that you'd have to rebuild from once the pandemic lifts. And so that, I don't know if that theory is right. It sounds good. And so, feel like, okay, it's a good shot. I mean, I've said on this podcast before, I'm overall a believer in the idea that we're a consumer economy. And so whatever juices the consumer base, I think kind of works. But of course you do have to watch for inflation at the same time. I think it's a delicate balancing act.
And I guess I take a more pessimistic look at it. I think people are much more willing to freely spend free money or a stimulus check than maybe like a hard-earned paycheck that once they are back in the full swing of work. So I think the real test will be, as the population moves toward being more people vaccinated and the restrictions are lifted as cases and deaths go down and the metrics are being met to reopen everything, I think that's going to be the real test, that if we're going to see a pullback in spending from businesses and from individuals, or, if we're going to, because right now I don't know that you can drive interest rates any lower. And I don't know that you can give any, I don't know if you can, like how much more free money that can be given out without an inflation, rebound coming, where there's just more money out there than, more free money floating around in everybody's pocket than previously before. So I think, yeah, time will tell, but I guess I'm just maybe a little more pessimistic than optimistic on this one, but I could be wrong.
I'm gonna counterpoint you a little bit there, AJ, because I was actually listening to some public radio today, and Janet Yellen, who is now currently in charge, I think she's Treasury Secretary, but in any case, she talked about how stimulus is really important at this time, and she'd rather see us do more than not do enough, because I think, like Ty was talking about, the danger of not doing enough is that you stall the economy and then you got to restart the engine again. But if we do too much and inflationary measures start to come into effect, we still have a lot of tools we can use to bring down inflation, as opposed to stimulating an economy, putting money into the economy. It's kind of if we don't do enough, then we could end up stalling out. And I think the stimulus money certainly, we could do a better job of making sure that the right amount of people and the right people are getting the money. There are people who have been employed the entire time who've gotten stimulus money, and I think those are the ones who are going out and spending money on, these electronics or other goods that are not necessarily necessities. But you have a whole lot of people who are still unemployed and who are using that money to pay back rent, et cetera. But I think blanketing the entire economy, sure, it helps the entire economy overall, but until we get back to a place where the economy is up and humming and people are actually back at work and in restaurants and moving about freely and traveling, et cetera, doing too little, I think it has a big danger behind it. I mean, a lot of it depends on where you come from and which side of the spectrum you come from politically, and I think a lot of it also depends on, all this money we're borrowing goes somewhere. So of course we're going to be servicing interest on this debt for millennia to come, probably. But I think better to do more now than not do enough.
Yeah, I think that's exactly right. And the only extra thing I kind of want to add to that is that in the vein of doing more, I mean, you mentioned it earlier, Jack, as a shot in the arm, and I think that's exactly what it is. I mean, most of the people that really need this are in kind of a long-term situation where they're repeatedly needing this money each month. And so a one-time payment that they might manage well and that they might not manage well is not as helpful to them as something like what they always argue for in universal basic income, of just a static lower level of benefit received, but every month, because again, expenses are always going to be every month. And so I know that I think administration of that makes it kind of not work as well, but seems like the most fitting, answer.
I think just to double down on my position and also take a different bent on it a little bit is that, for me, staying out of the equity issues and any kind of social justice issues with this, it's simply like, I don't care who spends it. And I frankly don't care whether they spend it on food or iPads, because it's all jobs, right? It's all business, it's all jobs, no matter how that's being spent from my perspective. I think that from, in terms of how that helps the economy, a consumer-based economy, but I think that what doesn't help, I think the one thing I think is good news about it being spent on retail is the fact that it's being spent on retail versus being spent with Robinhood to buy stocks, and right. So I think that we've mentioned that before, but what absolutely doesn't help is getting the stimulus and having people gamble with it on the market. I don't see how that helps anybody. So that's my that's my take on that point.
It's interesting because everybody, I think, touched on it at some point or another, talking about how people spend this. And I remember over the summer talking to somebody's selling a furniture store and it's the stock, how's COVID affected your business, and you're expecting the tale of doom and gloom. And the first thing, this guy had a record year because of COVID and the stimulus, because the people that are still working, you drop a couple times at the time. I think it was 2,400 was the first stimulus. You can't go anywhere, you can't do anything, so people want to spend it on their house, where they've got to spend all day watching Netflix and Prime and working from home. So he had a record year, so things are going to work out well for him. I mean, it was, coincides with his retirement, and stars lined up for him. Mark, what have you got for us this week?
Yeah, I have another tale of woe from an accounting perspective of somebody who made a big fat finger mistake. From CNN, Citibank can't get back $500 million it wired by mistake, judge rules. This was kind of an interesting take. So apparently some accountants at Citibank made this error in paying off a loan for Revlon. They were just supposed to make some interest payments, but instead they ended up paying off the entire principal, costing Revlon an extra $500 billion that they didn't necessarily have. And they ended up sending $900 million to Revlon's lenders. And I keep saying billion, it's only million, but extra zeros, what does it matter at this point, right? So I think the judge ruled in this case that because the money was ultimately owed to the lenders in any case, it didn't really matter that they didn't know that this was just an interest payment. They thought they were in good faith being paid off for the entire loan. And the judge said, too bad, so sad, Citibank. You're going to have to live with that error. So, cautionary tale, but I kind of want to get your guys' take. Do you think the judge is being a little too harsh on this, or do you agree?
Yeah, that's pretty harsh, I think. And I feel for the accountant that actually punched this into the system to hit pay on it. And then the manager that then hit pay and approve on it, because, I think anybody on this panel or anybody that's listening has probably, made a mistake in their accounting career and, thought, oh my gosh, I got to explain this to somebody. But nothing to the tune of 500 million or billion. I forget if it was an M or a B in that number, but still that's a lot of money. And the fact that then for it to go all the way to court and a judge tell you you're SOL essentially on getting your money back, and then my thought was in this whole thing is the lender, or I guess the person that this payment is going to, was pretty adamant in not returning the principal. You think you could have worked it out between, I don't know, maybe nobody's read The Art of the Deal or anything, but like you couldn't negotiate to get some of your principal back and extend loan terms or something on this mistaken payment, that it went all the way to a court, I guess, is kind of yeah, I feel for him, I guess. I've been there and done that, but not to that extent. So wow, that's a lot of money. I kind of agree with that, being a little bit harsh, because it's a day later and you know where the money went, you know who's got it. It's not like somebody's going to get 500 million by accident and run out and spend it in 24 hours. So it sounds a little harsh, but I could also see where the judge is coming from with this ruling, because if they were a debtor and somebody sent a payment to them and they just, hey, this is what you owed, we thought you were paying it off, we're not giving it back. Who knows? I mean, that might have been it doesn't really say, but that might have been a dicey or risky loan to begin with. And this is their chance to get out from under it. It does sound harsh, but I can see why the judge ruled the way that he did.
Yeah, I'm kind of with Jack on this. This seemed like, as I was reading the article at first, I was, a little bit, I don't want to say outraged, but, it was, it's a big mistake. But then when you figured that they owed the money, that just seems to change it quite a bit. And I guess the other thing is just to mention that if they owed that money and they were able to pay it off, then and they had that credit extended to them, you would think they'd be a good candidate for getting more credit now that they have all their loans paid off. So I know that's maybe not as realistic in this situation, but it seems like, one of the factors in trying to judge a case like this.
Yeah, they're going to have to sell a lot of makeup to make up for that mistake. Good luck with Revlon. Charlie, what you got for us?
All right, so not to beat a dead horse here, but I've got an article from NBC News called "Billions Were Stolen from Unemployment Offices. Now it's creating a tax headache for victims." And so earlier on the podcast, we were discussing just administration of social benefits and getting the money not doing what it's supposed to do. And here we have unemployment benefits that were given to people under fraudulent pretenses. There was apparently organized crime groups that got into the business of essentially finding previous data breaches and then testing the government systems with those with that information and somehow using that info to submit claims. And they were able to get away, according to the Labor Department, with over 36 billion has disappeared from the unemployment system. And so one of the ways that they caught somebody that I found kind of hilarious is that there was a California rapper named Nuke Bizzle, who made a music video about all of the money that he has pilfered from unemployment. And so basically unemployment office showed up after they saw this video. They were able to, determine that he was being honest there. And so basically, yeah, I just think it's one of those things that anytime you have to give this benefit to this wide array of people and you're pushed up against the gun to kind of get money to people, I think you have these sorts of problems tend to arise. And so I guess I just wanted to kind of like talk to you guys about this angle. So for me, the thing is, I think this sounds, when you first hear it, like a government issue, but it's really going to become a business issue, because what's going to happen is that as all those claims, those are going to work their way into the experience rating that unemployment charges the companies. And so I think ultimately we'll end up paying for it as businesses. And so I want to get you guys' take on whether you agree with that stance or, yeah, what do you think?
Well, same thing at the BNI meeting again this morning. There's been an accounting firm, and they've been bringing this up basically weekly for the last month, talking about this fraud. And Charlie, you're right on. The onus is really on the employers, and they get a notification from unemployment, and this person never worked for me, and they ignore it, and lo and behold, that person starts charging against it. It's going to hit their history. And I guess this is widespread. I mean, she mentioned, I guess it's real bad in Kansas of all places, but you're working with a lot of small businesses out there in Oregon. I'm curious to hear if you're hearing this surface with any of the clients or in the business community out there.
Well, I haven't heard anything from my clients regarding unemployment fraud, but I might want to mention that Little Drizzy, or whatever his name was, from California, that essentially made the music video, was not the first rapper to publicly display his, circumvent the system of public service. If anybody remembers Old Dirty Bastard's solo album from back in the early 2000s, his album cover was his food stamp and Social Security card that he had, and he was, a multi-platinum Wu-Tang Clan member, and in fact, he had charges leveled against him for fraud against Health and Human Services and the DES fraud. So I might mention, just a shout out to rest in peace, Old Dirty Bastard, for being a pioneer in this. But I might mention that I guess I take a different stance on this. That I think when these kind of organized crime organizations or kind of fraud happens, I think, they should probably take a page from Las Vegas and hire these guys to understand how this fraud is going on, as opposed to leveling charges against them. Maybe give them the old good cop, bad cop, we either put you away or you can help us figure out how you did this and we can prevent that again. So I think, maybe carrots work better than sticks sometimes, but I think it's an interesting conundrum. And I think, when there's an opportunity, the people are going to come out that have opportunistic nature in it, whether it be entrepreneurs or, the shady side, I guess, of business, like organized crime or any of the below that. So I think it, again, like Jack said, I think it really goes on to the employer to be cognizant of unemployment claims coming in and realize that you're paying an insurance or some kind of premium, either in your payroll tax or through a broker service that covers your unemployment. And if somebody claims against it, that means that your costs are going to go up, and your unemployment insurance payment is going to go up. And to factor that into what it's going to cost to run your business and payroll service. So, I mean, I guess it's another FYI and CYA on this podcast to be cognizant of these kind of scams and be diligent about it.
Yeah, and I'll just add that I'm absolutely shocked that somebody named Nuke would do something so chaotic and uncalled for, like stealing from unemployment. But the paperwork mess, as I was reading through this, I know it's just an aspect of this, but the IRS is telling people who have been defrauded, don't declare the 1099-Gs on your tax returns. So then they're probably going to get audit letters following up saying you didn't declare everything you needed to declare. I mean, it's just going to create a complete hassle all the way around. And you're absolutely right, Jack and AJ, this is going to end up costing employers more in the long run, because those who decided not to respond, or I think one of the guys in the article even worked for the IRS and this happened to him. So, if you're working for such a large organization that they're not even paying attention to who these letters are coming in for, it's something that slips by you. And while I think the onus is on the employer, do you have to hire extra people if you're in such a large organization to just figure out if these things are real or not? So it's not good all the way around. I mean, we've had fraud all the time, and this is probably just the latest way to take advantage of a current situation that we're in. I mean, we see it with the PPP loans, we see it all over the place, and these flashy stories get the attention, but at least it can bring it to the top of mind so that we know, be aware, be careful, and know that it's out there. And if you're a victim of it, report it and make sure you know what the right way is to respond.
Yeah, and the article mentioned, creating accounts at the Social Security Administration so that you can monitor what benefits have been rendered under your name and that sort of thing. So I think that's a good step for people to do. AJ, do you have another article we can talk about?
Yeah, I sure do. So this one comes our way of Counting Today. And I'll reference the article because I think it's a really good read. It's kind of an in-depth kind of look into tax changes brewing online for alcohol marketplaces. So we've talked about on this podcast before how the pandemic has wrecked some business segments like the restaurant and bar industry, but it's been kind of a boom for those, like when we've talked about on the podcast before, states where marijuana is legal, marijuana sales were up during the pandemic, and also alcohol sales. And one of the things that's kind of new and has been kind of the state laws and federal laws have been relaxed on is alcohol delivery. And so Uber, and I didn't know this, has an acquisition out for alcohol delivery service called Drizzly, and Venmo recently round of funding essentially shows that big players are going to be moving into alcohol sellers and marketplace facilitators. So I guess just to put in context the amount that this kind of segment of the economy has grown, from early March through June of 2020, online alcohol sales grew 309% over the year. And alcohol e-commerce sales are expected to exceed 40 billion worldwide by 2024. So you're talking about a large pie, and a lot of these big players are wanting a piece of that. What that means, though, is that, when there's such a large economic sales opportunity, state tax regulators want a piece of this. And so you're talking about, basically an e-commerce service that's selling alcohol that has what's known as a sin tax, or their TTB tax is leveled on it too. So all alcohol sales, regardless of where you're located, need to first register with the Federal Alcohol, Tobacco Tax and Trade Bureau, better known as the TTB, the State Alcohol Control Department, State Tax Authority, and local tax authority where it's available. And so I guess in figuring this out, economic nexus law typically provides an exemption for small sales, those less with 100,000 in retail sales or less than 200 retail sales transactions in a state for the previous calendar year. a seller under, but then it kind of gets murky on who pays that tax. And so the article gets into a lot of good detail, I think. And I think what was interesting also in the article is the shift from, I guess, the National Restaurant Association, more than 110,000 eating and drinking places were temporarily lost or permanently closed in 2020, costing 2.5 million jobs. But then 7 out of 10 full service restaurants have added alcohol to go options since March 2020. And 35% of takeout customers told nationwide restaurant associations that they're more likely to choose a restaurant that provides alcoholic beverages to go. And I think really what I got out of this article is there's an opportunity there for our friends in the alcohol business, whether it be hard alcohol or beer and wine, that I think state regulations are going to be relaxed. But I think it really points out the murkiness and the in-depthness of the law, that's the law and the taxes that go along with alcohol sales from a distributor to a door sale that need to be in place, and how much regulation is there as opposed to if you were just selling sweaters or hoodies or something. So I'd like to get your guys' take, and if any of this is surprising to you, or if, maybe I'm just, preaching to the choir here, if you guys are all on board with this.
Well, it's just, I think this is another one of these realignments that we're seeing post-COVID. I think that's the big driver behind this: people staying at home, people not wanting to go out, and the marketplace being able to adjust to it and having these things delivered. I mean, I think, prior podcasts we've talked about, diversifying revenue streams, and that's one of the things these restaurants, now that this is going to be in place, it just provides another revenue stream for them. And I think this post-COVID economy, you're going to see a lot of realignments like this. So I'm not really that surprised.
This topic has been a hot button issue for distilleries and producers in Oregon, because the Oregon regulator, the OLCC, really charges a large amount on direct sales by producers. The system was basically set up to incentivize producers to sell to third parties, to sell through the wholesale channels or to outlets, such that producers are mostly de-incentivized from direct to consumer business. And so I think that's when it, related to this, that's a big thing for us here in Oregon in that industry, is trying to get that changed, trying to get that get the state to make a major pivot on that, realizing that for those producers to do well and survive into the future, a direct-to-consumer strategy, which is e-commerce, is a big part of a direct-to-consumer strategy, is necessary. And so hopefully that will happen, and we'll see our friends in that industry benefit from that.
Yeah, good things afloat, I think, if that goes through. Jack, you got another article for us?
Yes, we don't normally associate storms and snow with Texas, but Texas got hit particularly hard this week, and it was kind of interesting reading the article. Right away, people blaming wind turbines, but if you read the article, everything got knocked offline, and natural gas, everything. I mean, nobody was getting any heat, and they were instituting, rolling blackouts across the state. So I guess it's, obviously, I mean, you're going to build an infrastructure, but it kind of reminds me of a story back in the, the building boom in Houston, where they used lower grade plumbing. And sure enough, when they had a freeze, a bunch of plumbing froze down there, and they had a disaster on their hands. So, I guess it happens, once every 20, 30 years, but gosh, when it happens and you're not prepared for it, it's really kind of surprising that we could have a state that size that was that unprepared for something like this. Something I thought was really interesting in the article, it's already talking about wind power has surpassed coal in the state of Texas, which I was a little bit surprised to hear that. I wonder what you guys thought about that article.
I think it's disconcerting, not only in Texas, but just nationwide. I know even here in Oregon, in Portland, Oregon, we've had people in our community who've been without power for numbers of days, and thinking about what that means in terms of not being able to get warm and stuff like, I mean, it's just kind of, it's a mind warp for me to think that at this day and age, we can have people who aren't able to that have like basic survival issues because of something like this in our well-developed communities. And so Texas is really suffering more and harder in a lot of ways, but across the country we're seeing that. And I just think that phenomena is just very, very interesting to me, that we're not as advanced as we think we are, I guess, is the moral to that story.
Yeah, Ty, I gotta say,
think
I was thinking the same thing, just about how quickly everything became medieval, and yeah, it was so apocalyptic, hearing people writing about what they were experiencing. And so, yeah, I thought that was interesting. What do you think, Mark?
Yeah, and I think also we've got the perfect storm, if you will, of COVID as well. So even the shelters that people are putting up, people are scared to go be with other people at this point. We've got the fear of God in us that we're going to catch COVID, but yet we're at home freezing or have to boil water. And some people have electric stoves, so they can't even boil water. I mean, it's quite apocalyptic, and I'm in agreement with all of you that it's really sad that we have these kind of infrastructure issues. I mean, I can't really, when I think about it, you can't really blame Texas for not budgeting a whole bunch of money for a great snow and ice event. I mean, it never happened. So it's just like in Oregon, we don't have snow plows and a great infrastructure for dealing with snow and ice here either, because it's not something that happens all that frequently around here. So, I don't think getting into conversations as to how much of a percentage is wind power versus coal versus gas in a specific area really helps us when we look at, really, it's just, how do we take care of issues when they arise, and how can we take care of people and get them back to normal and get those who need the power the most back up and running.
Yeah, this article really hit home. I mean, I suffered my own kind of tragedy. My mother-in-law had to move into my house for 3 days because her power is out. So, I mean, my heart goes out to Texas. I know I felt that same kind of tragedy in my life. So, luckily my power only went out for about half a day, but, I mean, she was here 3 or 4 days, but we got over it and we got through it. So she's back and warm in her house. So, but yes, my heart goes out to those Texans.
That's kind of, I'm kind of where Ty is. It's very disconcerting that an event like this can have us living like the Flintstones tomorrow. It's just it's really kind of disconcerting. Mark, what, you got another article for us to talk about?
Yeah, I wanted to wrap us up with something a little more lighthearted, because we can get a little bit heavy on this podcast, and this might be a little inside baseball for some of you accountants out there. But I found this funny article on a blog called Accounting Fun, 10 things that only financial controllers will understand. And let me tell you, I related to quite a few of these. So number 1, people never really understand what your job involves. Number 2, the color scheme on your spreadsheet is actually important. Number 3, it's infuriating when a balance sheet doesn't balance. Number 4, you're wasting our time when you promote stuff to us. We have no buying authority. Number 5, having the auditors on site is a pain in the neck. Number 6, no one wants to know when your cash flow shows no flow. Number 7, everyone thinks you can help them pay less tax. Number 8, friends only call when they want financial advice. Number 9, new versions of Excel are really exciting. And number 10, everything in life can be reduced to debits and credits. So I'll let that sit, and if you guys want to comment, please do.
This article above any kind of resonated with me, because the fact is I don't hear from a lot of my friends until they A, have a problem with their accounting system or debits and credits, or B, they have tax questions, which I have to tell them I'm not a tax accountant. I'm going to do the same thing they should be doing and Google the issue that they're coming at me with. It's just like tech support for my mother-in-law. If she has a problem, I go on and I Google it. Dr. Google knows best. But the color coding on my Excel sheet absolutely does matter. And my formatting, definitely, I have my favorite format for my tables. And if somebody has a different one, I need to change it so that I can read it correctly. But yes, I wholeheartedly agree with all 10 of the lists there.
Yeah, I gotta say this list was too close to home for my tastes. It hit just about everything that I thought of on this topic. So it was great. What do you think, Ty?
I'll take a contrary viewpoint on a couple of these. First off, and I think I'll probably alienate people on this exact podcast because I've got this weird thing. I really do not like colors on my spreadsheets. And it like makes my head hurt when I get a very colorful spreadsheet. And so 9 times out of 10, I like get rid of all the colors. I really like my spreadsheets to be just black and white. And if there's going to be some color, it better be really damn important. It's like, and it should be used very sparingly. But I also know that I'm in the great minority on this. My wife being an accountant as well, her spreadsheets make my head explode. So I understand that I'm not the only, that my view is the minority among accountants here. But yeah, I cannot stand all that color. And then on the debit credit thing, the one thing I'd say about that is, no, all the debits in the world do not add up to all the credits in the world, and us accountants just have to live with that fact.
With you on the coloring, Ty. Not into a coloring book. I'll use it to alert to something, but yeah, I'm the same way. I've looked at some of those things. Lucy, open a window. It makes me dizzy.
I think one of the first clients Ty and I worked together on, there was a spreadsheet that they had modeling sales. And let me tell you, Technicolor, rainbow, there's no way to describe this spreadsheet. It was a kaleidoscope of color that was supposed to have meaning, but all I saw was a psychedelic poster spinning in my face and I couldn't get the numbers out. So I think I should have reworded that in tasteful use of color, maybe 1 or 2 to accent the table that I'm looking at, not a kaleidoscope, psychedelic poster of, Led Zeppelin or something on my spreadsheet. So
that come with LSD.
AJ, I might add that if your mother-in-law is having problems with her finances, you could just invite her to move back in with you and you could just handle it from the home front.
That's right. Yeah. That sounds like a great idea.
Doesn't she watch our podcast?
On the regular, no. All right. Thanks for watching the None of Our Businesses podcast, the weekly YouTube show. And make sure you hit the like and subscribe button and meet us here back next week for more topics from an accountant's perspective in the news. And everybody have a great week. Thanks so much.
See ya.
Thanks, everybody.